Hey everyone, welcome back to my channel. If you're new here, subscribe the channel, and today we're diving into a topic that's super important for your financial health: credit scores. Whether you're planning to buy a house, a car, or just want to get a better interest rate on a loan, having a good credit score is essential. So let's get started on how you can improve your credit score. Introduction of credit scores. First, let's quickly cover what a credit score is. Your credit score is a 3-digit number that lenders use to determine how likely you are to repay your debts. The scores range from 300 to 850. Generally, a score above 700 is considered good, while anything above 800 is excellent. The factors that influence your credit score include payment history, amounts owed, length of credit history, new credit, and types of credit used. Now, let's break down these factors and see how you can improve each one. Payment history. The most important factor is your payment history, which makes up about 35% of your credit score. The key here is simple: pay your bills on time. If you've missed payments, start paying on time now. Set up reminders or automate your payments to make sure you never miss a due date again. Amounts owed. Next is amounts owed, which accounts for 30% of your score. This is where your credit utilization ratio comes into play. It's the amount of credit you're using compared to the amount available to you. Aim to keep your credit utilization below 30%. If you're carrying high balances, focus on paying them down. You can also ask for a credit limit increase to improve your utilization ratio. Length of credit history. The length of your credit history makes up 15% of your score. The longer your credit history, the better. So, avoid closing old accounts even if you don't use them often. If you're new to credit, consider becoming an authorized user on someone else's account to start building your history. New credit. New credit accounts for 10% of your score. Be cautious when applying for new credit. Each hard inquiry can lower your score slightly, and too many inquiries in a short time can be a red flag to lenders. Only apply for credit when you need it and space out your applications. Types of credit used. Finally, the types of credit used make up the last 10% of your score. Having a mix of credit accounts, like credit cards, installment loans, and mortgages, can be beneficial. It shows lenders you can handle different types of credit responsibly. Monitoring your credit. Another crucial tip is to regularly check your credit report. You can get a free report annually from each of the 3 major credit bureaus: Experian, TransUnion, and Equifax. Look for any errors or signs of fraud and report them immediately. Monitoring your credit helps you stay on top of your score and catch any issues early. Improving your credit score takes time and effort, but the benefits are worth it. Better interest rates, higher credit limits, and more financial opportunities are just some of the rewards. If you found this video helpful, don't forget to like, share, and subscribe for more tips on managing your finances. Thanks for watching, and I'll see you in the next video.